Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past 1. Apologies for being a couple of moments late. Just had a couple of technical issues here in London. I hope everyone's well. Big shout out to everybody that's joining the stream live today, and obviously to everybody that watches this on recording. Guys, do let me know if the visuals are coming through okay and if the sound is okay. We're going to take a look at Bitcoin today, ETH as well. Obviously, the kind of big news in the market, obviously everything that's unraveling with FTX. We can see that we've had a news event that's obviously impacted the market, so it makes sense to go and look at the counter or the correlated assets as well in the same class, so things like ES and NASDAQ. All right, so we're going to take a quick look at those, and we're going to try and make it a little bit of a shorter and punchier stream today, heading in for token 2049. Going to meet up with some legends in London later, so I don't know if any of you guys are in and around the event. If so, be good to see you there. Sorin, hey bud, thank you for the confirmation. All good. Sound. Dominic, the same. Thank you very much. From Wales, brilliant. Grandfather was from Wales, from Aberystwyth. Fantastic part of the world. Razoon, my brother, my Nest brother, how you doing, man? Thank you for joining the stream. So I thought let's just start today with a clean chart. For those of you that watch the stream regularly, I like charting these things out from the base up. So it's always good to start with a clean chart. Now, a lot of people at the moment are in panic mode. Obviously, there's big news developments, for FTX, I believe is the second, possibly largest player next to Binance. For them to be in the situation that they're in doesn't really put the crypto industry in the best light. All right. So this isn't a discussion for now, but to factor into how we're thinking about this in the future, events that are as impactful as these often have lasting consequences, right? So I know a lot of people now are talking about the idea, is crypto dead? Is everything going to zero? For those of you that know myself in the stream, I just trade the charts level to level, right? So I take my high time frame bias, I decant that down onto lower time frames to execute. The bigger picture, the macro picture stuff is always so important though, right? So this is why I wanted to start on the weekly chart today and just zoom right out, all right? I think we forget to do that, or a lot of people forget to do that quite a lot, and kind of give ourselves this context. So we've seen this drop, right? We can see, let's just zoom in quickly to this pretty ugly looking weekly candle that's developing right now. Obviously, we've got a long way to go in the week yet. This thing could go down a lot more. It could completely retrace. We always want to factor in the highest time frame, right? But at the same time, we don't want to let that be a constraint. QBS, my bro, got some legends on the stream today. Thanks again, guys, for jumping in. Double R as well. Hello, mate. So we've got a long way for this candle to go, right? Now, candles for me are so very important. So when we look at key candles like engulfing candles, be that bearish or be that bullish, when we look at pin bar candles, when we look at the patterns that we develop from candles, okay? So I'm talking about patterns like the inside bar, all right? They can tell us a story, okay? So for me, the first thing I'm doing when I look at a chart, I want to know what's capping the market, right? What's stopping the market going down and what's stopping the market going up. So as we're here on a weekly scale, first thing I want to do is just zoom out a little bit. And it's always important to look left, right? Now, I know a lot, myself included, I'm not putting myself in this bracket of legends by any means, but a lot of very, very top technical analysts, people like SC, especially EXO, who's been very, very vocal about it with these levels for quite a long time, talking about price retracing down into these levels, maybe 11, 12,000, right? So I wanted to share a little bit of the thought process around that because I remember when I first got into trading and I was very fortunate to land on my feet following some really, really good people. I always remember thinking, how do they make these targets? Where are they picking these levels from? It's not just support and resistance, because we see that throughout the charts, right, all over the place. It's often about inefficiencies, right? So when we take this bull run, for example, you often see price having these impulse moves and they don't retrace to levels, leaving these inefficiencies or fair value gaps, right? So when we get this, we expect markets to be efficient, and markets need to be efficient. I've got some really terrible analogies that I'll share with you one day about that I share with my mentoring students. But the markets need to be efficient to be effective. So when we see these inefficiencies, and by inefficiencies, let me show you what I mean. I'm talking about fair value gaps, right? Which we're talking about these 3 candle patterns. And people ask me this all the time. I studied ICT, SZ predominantly for a number of years. So a lot of these concepts are ones that have come from ICT, where he talks about the fair value gap and inefficiencies, Larry Williams, people like that. Obviously, these things have existed for a long time, but I believe it was ICT that coined that phrase, right? Now, a fair value gap is something like this. Now, if we look in this area here, let me zoom in, guys. If the charts are too small or they do, let me know and I'll go in a bit closer. Now, we see we get this candle here, right? And we close here, we open here. Yeah. Now, this candle goes down, we close here. Then the third candle, so 1, 2, 3, closes here. What we're interested in is the gap between this close here and this, right? So we've got the low of this and the high of this. What we can see within that space is this inefficiency, right? Now, let me just make that slightly, there we go. Okay, so as we can see here, what price is doing, or what the market is doing, is rebalancing, right? So inefficiency, we see this as a magnet, as a draw on price, as price comes up to fill this fair value gap, right? Now, while we haven't filled it completely, and while we might not fill it right away, while other fills might take months or even longer, might take years, right? So when we're looking back here, and when you saw a lot of top analysts talking about the concern about losing these levels here, because when we're talking about what's capping the market, right, or when I'm looking at that, to put that into context, I want to know what's stopping the market going higher and what's stopping it going lower. So a good example of that up here for me would be something like this, right? Now, when the market got up to here, the reason this was a significant level for me, let me just make that a bit bigger for you guys, was because we can see as price came into here, it found resistance, right? Tried to get beyond it, got beyond it, but didn't close. When it deviated this level and came back down, we saw an impulsive sell-off, right? Now, price came down into liquidity here, yeah, to these order blocks. And then price came back into this level again. Now, while we had a close above here, and obviously we're doing this with the benefit of hindsight, we can see here that this was a deviation, right? Price comes in, yeah, can't get above this level significantly. We factor in this high here as well. Then when price fails to establish itself over that level and comes back down here, again, we see this aggressive sell-off, right? We first look for liquidity. We take out these lows via the order block. Then we come into these lows. So for me, that's a key level of interest. Now, if I was looking at this level here, I'd be looking at these wicks, yeah, that line up in this area here. And there's clearly some significant buying going on there, because as price comes into this level, we can see how it's getting bought up. Now, the other thing to factor in is losing this level, which we could consider key support here. Yeah, we need to look at what's below it. And for that, we need to look left. All right. So as we're talking about inefficiencies, yeah, we can also look left and see these fast moves. Now, while we have a fair value gap here between that and that, yeah, we can see that actually this move up here was covered by this downside wick, this upside wick here. But the move itself is very fast. Yeah, you can see what an impulsive, expansive move up that was. So because there's not a real period of accumulation, we've got these two kind of down candles here that we can consider order blocks. When price moves up this quickly, the chances and the likelihood are that it will move down just as fast. All right. So when this level was lost here, this key support, we see we got this close, we got this impulsive move through it. Yeah. And then price has come down. And we're now have filled this inefficiency here, right? So we can see the amount of time that this has taken. You know, this was December 2020, right? And that price didn't get revisited there until June 2022, all right? So these things can take time, but the market does want to be efficient. So now we're here, we filled this. On a weekly scale, what are we looking at, right? So we can look left here and we can say to ourselves, okay, well, we filled this inefficiency here. There can be some orders within here, right? Now, if we're looking at this as an order block, because we've got the inefficiency or the fair value gap after it, yeah, we can take the order block from wick to wick. Let's just make this blue. So this is a key point of interest for me. Now, order blocks, like we would treat a traditional support and resistance level, if these get flipped, right, then this has acted as support here. We can see the buy orders. Yeah, price has come in. We got this nice reaction here. Price then dips into it again. But we can see it, right? We can see it losing momentum. Comes in, gets this initial reaction, comes back down into the buy orders again, comes back up, can't take out this high, comes into this order block, and then just continues to go down. So the question we've got to ask ourselves now is the buy pressure strong enough here that we see a reversal? Yeah. So maybe we've taken out the liquidity, we've taken out that order block. Yeah. We've also got to remember that we've got liquidity below these lows that's now been completely swept, and we're going to look at that on a lower time frame. So now we say to ourselves, well, now we've taken all that liquidity. Is that enough to fill the institutional buy orders and smart money for price to come back up, flip this, right, from resistance to support? Now, obviously, news events are a major catalyst in any market, all right? So we have to consider, obviously, what's going on with Binance and FTX, all right? So obviously, there's been a lot in the news about that, and my current understanding of it is that Binance are now looking to acquire FTX. You know, a lot of condolences to anybody that's caught up in that. I'm a professional registered trader with FTX, so you know, a lot of people are in the same boat. One thing it should obviously always teach us is to make sure that we're not beholden to any particular one exchange, and that obviously, you know, we're managing our money. But a lot of people have been caught offside with this one, and all I hope for them is that things get rectified and everybody gets their funds back. So before I digress too much, we can see this here. We got a clear play that if we come in, if there's orders still in here, if we can get back above this, yeah, and then we come back in. The key thing for me will be taking out this high here as well, right? Because we want to see this market structure break to the upside. Then we'd be looking for some kind of retest here and then price to push up. However, if we're looking at the opposite situation, right, which we could very well be, which is that if we close below this level, right, and then we get a retest of this, then for me, I think we risk seeing a pretty fast move down here, right? This bit particularly. Now, why do I say that? Because when I'm looking over here, once again, what we can see are these inefficiencies, right? So if I just draw these in quickly, just to give it some context. Right, these for me are what's kind of drawing price down. If the market wants to rebalance, it wants to become efficient again, then it's drawing down into here. The other thing that we can see here, and the data is a little bit held up going back, but we can see the last point of really any consolidation we had, any real kind of price action here, is in here, right? Now we've got this that sits above it, the fair value gap. We've also obviously got this consolidation here to take into account. So I think if we were really looking for these downside targets, and again, top traders like Exo, people like that have been pitching these figures forward for quite a while, around the 11K mark. Doesn't mean we're going to get there, right? But it means that we always have that in our mind. We're saying to ourselves, okay, where are our key targets? And obviously we decant this, we move this down through the time frames, right? I'm using the weekly, the higher the time frame, the stronger the bias, right? So if I'm using these as targets, if this is my theory that price is getting drawn towards these, if we get this close below here, then we move on to the lower timeframes. We'd be looking for some kind of pullback and reconfirmation that this has been flipped. And then we've got a key downside target here. If we lose that, then we've got another downside target in here as well, right? And this sitting above this consolidation here, or these down candles before this move up, this gives us confluence down here, all right? And this area is sitting late 11s to mid 12,000 region, all right? Just a couple of quick questions. QQRQ, shorting BNB, is it a great idea now? I think you always want to be careful when you've had a big flush of the market, right? We're going to take a look at some scenarios here on Bitcoin, maybe on ETH as well, as to what you can do to get into these moves. But what I would advise at the moment, from my own personal perspective, not telling you what to do by any means, is that I would be cautious. The same way Bitcoin coming down into this key level here, I think, you know, BNB would be in a similar situation. We want to look at these high time frame levels and say, okay, we've got our play. We get back above here, we want to push higher, then we've got these highs to take care of, all right, as targets. However, like I said, if we push down below this and retest it, we would then draw onto the lower time frames, get our confirmation, look for our entries with a clear downside target here. Obviously, on a weekly scale, we would set different and more local targets based on daily, 4-hour, etc. And a question here from Michael Maguire as well. It's a small order block where it sits now. Yes. So this order block we're talking about here, mate. Yeah, absolutely. So what we're looking for in terms of a valid order block is obviously a down candle before an impulsive move higher. Yeah. Or in reverse, we're looking for the last up candle before an impulsive move lower. Now, once we get past that, we would then move on to the next one, which would become the next order block. And that order block becomes valid when we cross in this case, this order block became valid when we cross this, yeah? So once it pushes higher, that becomes valid. Same with these ones. At the close of this candle is when this order block becomes valid. And what we're allowing for, we're saying if there's an inefficiency afterwards between these two, then we allow for the wick to the wick. If there's not, like for example with this one, then we would be looking at the body, all right? That's where we would expect price to draw into. Then we would drill into the lower time frames and look for some entry opportunities. All right. And Venceslav Kostov, apologies if I've pronounced that incorrectly. Where do you see Sol going from here? I'm not sure, in all truth. I think the market is having a little bit of a flush at the moment, but do pop me a reminder towards the end of the stream and we'll take a quick look at Sol as well. All right, mate? So keeping that in mind, we've got our levels here that we've looked back, our historical levels, what could be drawing price, right? So now what I'm saying here is what's the local price action, right? You're very welcome, Michael. Very welcome, mate. So what's the local price action here? Now, remember what we were just discussing, what I was just discussing. I'm looking for what's capping the market, right? So for me, I really like this level here. We can see we've come up, resistance, deviation, come back below, tried to push up above it. Yeah, failed to hold above. And then we get this big sell-off. Where to? Our sell-side liquidity, which is sat under here, right down these lows. Now, when I'm looking at what's capping the market here, that's what stands out to me, right? We've come down, resistance, yeah, found enough buy orders to make this impulse move higher. We've then come back down, support. Then we've come back down to here, support. As we can see, as price is trying to break down below this level, it's finding buyers, right? So when we plug that in with our order block as well, it makes sense, right? We see price come in, has this initial bullish reaction, comes back down. Now we see these small body candles, and SZ says this, and I think he frames it perfectly, which is small body candles lead to big body candles, right? So we got these small ones here. We see these downside wicks, and what these downside wicks are telling us is that there's buyers, right? So then when we get into this situation here, then we see the expansion higher, right? Now, obviously, if this candle closes like this, the key significance for me is two things. One is that we've closed below this level, right? Which is something that we haven't done, right? We came down here in June. We've been banging away at this level, and now it's given out. However, we need to remember we need to wait for the weekly close, right? If we do get this weekly close down here, and we have come and we've closed below this order block as well, then for me, if we have an inefficiency in here, fair value gap or something, I'd be looking for a pullback into here or to retest in and around this level before we then look to move lower, all right? So on a weekly scale, for me, they're the levels that I'm looking at, right? Now, just to put you in a little bit of context, when we had this move higher and we failed to get above here, we had this breakdown. We target the lows because this is where we expect liquidity to be, right? Now, what we notice here is when we had this breakdown, we had this fair value gap, right? This inefficiency. So when price was down here, right, came down into these lows, took out this here. Now, what we're saying is if we're expecting buyers to step in here, we've got two key triggers or two key points of information, right? We've got this fair value gap, which we expect price to rebalance, yeah? And we've also got a key level that we're coming into here that we see as offered as support here. Now we've come into it here, and we've also come into this order block. So see how we're kind of piecing this story together. The order block means that we expect some kind of bullish reaction, all right? And then what we're saying as well is we've got a key level down here, and then we've got this fair value gap here that's drawing price higher. So when we come into this area, we're saying, okay, if we see the reaction that we want on the lower time frames, then we would expect price to drive up on its search for liquidity, right? So we would look to target this area here. Okay, so that's how we're doing it when we're looking in terms of inefficiencies. We also had one here to here as well. So quick question here from Double R. Could you go into some detail as to why these areas are classed as inefficient, and why they, MMs, dealers, locals, like to revisit these inefficiencies? Are there reasons, mechanical or psychological? Yeah, really, really good question, mate. So from the teachings of ICT, and also from, if you look into sort of like market auction theory, bits and pieces like that, they're known as inefficiencies because the market wants to be efficient. Okay, now by efficient, you want buyers, you want sellers, you want a healthy marketplace. So when we get these inefficiencies, these gaps, is when you have these big moves, yeah. So you're getting these impulsive moves, displacement, right? As ICT calls it, displacement, yeah. Powerful big moves. Now within those moves, you often get these inefficiencies. The market's looking to rebalance here, yeah, because the market wants to be efficient. For participants on both sides to have an effective market to trade, the market needs to be efficient. Now, obviously, if markets were just like this, as you see this in bull runs, right, and you just get these big moves higher, 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 then, you've basically just got buyers in here and a serious lack of sellers, right? So when we think about the rules of supply and demand, what you're saying is, and let me share this really rubbish analogy with you. I was speaking to a friend of mine, Tony, about it this morning. I find my analogies are pretty terrible. But if you imagine a fruit and veg market, right? And you've got 20 stalls in the fruit and veg market. Now, if all of the different fruit and veg sellers are selling a variety of different goods, yeah, then the marketplace is efficient, yeah? It keeps price at a reasonable level, people have variety, and people go there knowing they've got a good selection of produce. Now, if 19 of those stalls all of a sudden can't get any produce other than tomatoes, then what you've got is you've got a market that's got too much of a supply of tomatoes, not enough variety, but you've got one stall holder who's still able to get everything and can sell everything. Now, the problem is the market's inefficient, right? You've got that one person, they haven't got the supply for the demand, so the price rockets up. Nobody's buying the tomatoes because the price is going down because there's too much supply of it, right? Now, as participants, we're not looking at this. We're looking at this as the view of the market makers. And the market maker, let's imagine this is the manager, the owner of the market. Now, they want the market to be efficient, right? So they want to balance the 19 stalls that are just selling tomatoes with people that are offering variety, right? Because then it makes a healthy marketplace where people want to come, price is under control, and it means that you've not only got variety, but there's a balance, all right? So terrible explanation, I know, but it's just one, I don't know why it makes me chuckle, but it's thinking about it from a term of the market maker. You want healthy conditions, so when people are coming in, people can buy, people can sell, institutions can come in with huge orders, right? And they can get those orders filled. Retail can participate in it as well. And it's an efficient marketplace, right? So that's why they're known as inefficiencies, because when we're looking for something that's efficient, yeah, and let's use this as an example, right? So what we can see here is price moves up, sets the high, right? Then it comes down to close, opens here, pushes higher, comes back down for the close. Now this move lower here crosses over with this wick, right? Now that's what we consider, this is what's efficient, yeah? So imagine it almost like a brick wall. You want the bricks to overlap, right? To make that structure solid. If you have gaps in that structure, yeah, at some point you need to go back and fill that gap. Otherwise, you're going to have a dodgy wall. All right, another terrible analogy for you, but I hope that clears it up, mate. The reason we look for those is because the market is drawn to those inefficiencies, right? So we're using that as, think of it more like a price magnet, right? We're looking for that. What's drawing price? What's luring price towards it? All right, that's what we're using, and then we're using our order blocks to say to ourselves, okay, where do we think that there's orders sitting? Yeah. So we take this last down candle here, for example, before this move higher. We see this moves an impulsive move up, breaks market structure as well. So what we're saying is when price comes back down to this, yeah, do we expect there to still be buy orders in there? Well, if there were buyers in here previously, the fact that we had this big move up makes us feel that there's quite a strength of buyers in there. All right. Then what we're saying is, okay, if there's buyers in here now, when we revisit this, yeah, we're expecting buy orders. Now, some people will just set limits. All right, some people will just set limit orders, for example. But what I like to do is I like to wait for price to come in. Yeah, I'm looking for, and again, this would be on lower time frames, but I like to see a sweep like this, meaning we've set the low, we've taken the liquidity below that low, and we've come in back into here. Yeah, so we've come back above the low that we've swept, we've taken liquidity, we've come into an order block where we expect buyers. On a lower time frame, we would look for market structure shift, all right, or for example, kind of patterns like this. God, this looks awful on a weekly, doesn't it? It looks like I've got the shakes. Yeah, so that would be our level. We would look for liquidity to be swept, price to come back up, close above this high, yeah, that takes out the low. And then we would look for orders around here, or we would look for an inefficiency in this move here. Obviously, that would be on a lower time frame. All right. So I hope that makes sense, mate. But basically, that's what we're looking for. And again, looking at the principles of support and resistance, we're looking for this, as we were discussing about this order block down here and how this we would look for this to be flipped. We can see that here, yeah. So this order block here, we've got buyers, buyers, buyers. This causes a big impulsive move higher. You'll often see moves like this because price is fractal, so you'll see it across the different time frames. But once again, like I'm saying, you're looking for a sweep. So we get this bullish reaction here. Price goes to hunt liquidity, which it finds above these highs, but also we've got other factors in there on lower time frames like fair value gaps and bits and pieces, but purely on a weekly. We get the run of the highs, yeah, which takes any stops that are above here and also traps any breakout traders and people that are looking to go long or people that got long quite late in the move. Take that liquidity and then that fuels the move to the downside, all right? So what we're doing is we're targeting where we believe price is heading in its search for liquidity, all right? That's certainly how I look at the markets. So I hope that makes sense. Couple of quick questions in here, some good ones. Alex, what have we got? Just checked the delta of yesterday's daily candle and XO charts for Bybit, volume 2.58 billion, but only 140 million delta. Buyers are not that weak, I'd say. Really, really good point. Good analysis. Yeah, I like that. And I know quite a few people actually that use XO charts really well. Not my thing in particular. I'm more based around price action, but absolutely really, really valuable data. And maybe this is how spring Wyckoff accumulation. Yeah, absolutely. So alluding to the fact that we're looking for these three-part moves, right? You're looking for accumulation, manipulation, and distribution. Yeah. So to go back to this example here, if we were to consider this the accumulation, yeah, and I'm using the bodies here, right? So we would consider this the accumulation. This would be the manipulation, right? So accumulation, price looks like it's broken out to the upside, gets people long, only for them to be manipulated and then take that liquidity before price sells off. And then this is the distribution, all right? So yeah, really, really good point. And again, Wyckoff fits very much into those principles as well. Floppy, what is FTC? FTC, do you mean FVG? Possibly, which would be fair value gap. Igor, Solana could go as far as 4.5 in the worst case. Yeah, I mean, I haven't checked the Solana chart today, but yeah, absolutely. If you're looking at that for downside targets and that, again, like I say, for me personally, I'm looking for these order blocks or inefficiencies that can be filled. And I know we've got a lot of those coming down in there at the moment as well. Tom comes in with a good point. Might be a lot of SOL getting sold tomorrow to raise capital for Almeida. That's a very interesting point there, Tom. Yeah, very well could be. It's going to be very, very news driven this at the moment. All right. It's going to be very, very news driven. Let's see. Floppy. Sorry, buddy. I've obviously put the title in incorrect. It should be FTX collapse. Really, really good spot, my man. To pop this up at the moment, guys, just a reminder. So I'm terrible at these things. We've got free trading congress going on at the Bird Nest. All right. So there's some links in here. There'll be some links in the descriptions. Come and check it out. Tons of prize giveaways and all kinds of goodies going on. Got some of the top people in the whole crypto industry as well as traditional finance coming on to do roundtable events, talks, and we're going to be putting on workshops for you guys as well over a 10-day period. So do come along and check it out. It's all absolutely for free. All right. Liam, do I think FTX will be accepted with their new balance sheet? I'm not sure, mate. I don't know. I have to say. I need to look into it more. We've got a fantastic fundamental team who do a lot of that work for us. So, again, come and pop across to the Nest, get yourself involved, or get yourself involved in Congress and get some free memberships to the Nest as well. All right, and the free newsletter. These guys really do help keep us updated on all of that. And then Floppy, no, your time, brother. No. Good point there, Floppy. Always good to do that. And the legends of the Nest have popped on there and fixed that for us as well. Thank you, Floppy. Very, very kind of you guys. Really feeling the love today. We've got a great amount of numbers up. Hopefully, I'm not waffling on too much. I know I do waffle on. But questions and bits and pieces, guys, they come in. Do let me know. I will try and get them on there. All right, and try and deal with them as we go. So, basics as we see them here. We've come into this key level now. For me, this isn't really a trade zone at the moment with the news events that are going on. All right. So that is something to consider. John Pepper, can I view this session later? You absolutely can, mate. It should be recorded and available shortly after it finishes. So, got our range. This is our range, right? For me, this is what I'm looking at as the range. Range high, range low. We've just broken below this. We close below this. That's bearish. We've come into this order block, but I'm really interested to see how we react here. If we start to reclaim and move higher, then we could be looking to pump back. Especially if we close here, next day goes down a little bit, probably come back to fill some inefficiencies before a potential move lower. So let's ping on to our daily and see what the daily is telling us as well, right? Now, one thing that I do bring in, although I'm predominantly a price action trader, one thing that I do always bring in is my B Pro for divergences. I know a lot of people, I don't know, divergences either work for people or they don't. For me, they've been really, really helpful in my trading career, and I've built some really effective strategies over them. And I found B Pro to be the best for this, purely because it takes on multiple indicators, right? Works them out across a number of different assets. I believe it's like 10 or 12. And then it gives you a percentage on the divergence as well, which we can see here. Now, these can give us really, really good confluence, right? So one of the strategies that I work with a lot with people is looking at price coming into a key level or taking out a key high, or a key low. In this case, we're looking into here. We see these downside wicks. We can see there's sellers stepping in, right? Then we say to ourselves, okay, we get our divergence here. So this candle is tradable. We dive this into lower time frames. What have we got beneath us? We've got this lovely inefficiency, this fair value gap, right? So we're saying to ourselves, well, price is probably going to get drawn towards that. So within here is where we get our day trades. We would have a similar situation here, although notice how these highs are getting closer together and these upside wicks are getting pushed down more aggressively. When we deviate here and come back within, when we deviate a second time, come back in and retest, that's when I would be expecting a deeper correction. Now, with any kind of range plays, if we deviate, close back within, we target the opposite side of the range via a 50 line, an equilibrium, right? That's certainly how I do it anyway. So I'm looking here. And if we were coming in here, if we're sellers in here, then we're looking to this inefficiency. Yeah, this fair value gap, which we can see gets filled nicely here. We come down, we're taking profit here at the 50 line. We can wait to see the reaction that we get here. And then if we get the reaction that we want to see, then we can target back down to the lows, to take out the liquidity below here and here. Once again, we can see we get our divergence here. Interaction with a key level. Price closes back within. We're within our order block. This gives us the confidence to look for targets higher up. And where do we look for targets here? Well, let me just get rid of that for a second. Once again, we're saying to ourselves, okay, if the market wants to be efficient, where's it looking to push? And we can see an initial target up here. We're saying, okay, but as we're buyers down here, we're also looking for closer targets, right? We don't want to be greedy. So we're looking for this. And what we see here is as we get this reaction down here, buyers have stepped in. We get this impulse move higher, fill this fair value gap, fill this one here, deviate these levels. So again, a little bit mean from the market. That's how it tends to work. You get this pump high. We take out these highs, and then we get this aggressive reversal to take out the liquidity here. So I'm looking at this like liquidity games, guys. People moving from buy side to sell side. Where are we looking for liquidity? So if price is going to drop down here, as we've discussed, we've taken out this liquidity. Now we've come into this order block. We've now taken out this key low here, which is our sell side liquidity. All right. So we would draw this in. Mark it up. as our sell side liquidity. That's what the SSL stands for there, right? Now, when we look at these key lows, we can see how price reacts when it comes into them. And it's telling us if price is looking to reverse at that stage, if buyers are stepping in, or when we're taking over the highs, if sellers are stepping in, right? So the one thing for me that we've got here is this sell side liquidity. And this is the first time this has been run, all right? So it comes into here. Now, we haven't closed below this yet, right? So this is going to be interesting for me. And again, as we build this picture, as we tell this story over time, this is another page to that story, right? We've seen the lure of price coming down here. We've looked at the inefficiencies. We've seen the market structure. We've targeted the order block where we expect a reaction. We see the reactions getting weaker. We've now seen price purge below it, and we've now taken out the sell side liquidity from this extreme low over here. So if we close below here, as we said, yeah, and we could look to see price maybe correct a little bit, but if this closes like this, right, then what I would be looking for on a daily scale would be for price to retrace into this area, or possibly even here. We've got confluence from this key low, right, and then this fair value gap. And then on a lower time frame, right, I'd be looking for price to get into this kind of pattern, right? Why this kind of pattern? Because we'd be looking for a high to be swept, yeah, and then for price to come down and close below the low that swept the high. And then we can be buyers here, yeah, or we can look for a fair value gap inefficiency in there, okay? So that's what I'd be looking for, because I think if we close below this, we've taken all this liquidity. If we don't see this bullish move back up, yeah, and the great thing about it is on the lower time frames, yeah, if price is doing this, right, then you don't short it, right? You're looking at these as your key points of support as it goes up. If it's not coming and closing below and we've got that bullish structure to the upside, we can retain a bullish bias. However, if we get that reversal within that point, I then think that this all stacks up. The price could be looking to go lower. All right. So, couple of questions. Nicole, hey, thanks for joining the stream again. Good to see you. Who have we got? Do you think buy now from John? No, not really my style, mate. Like I say, I'm more of a level-to-level trader. We've got some exceptional higher time frame traders, investors, and fundamental teams at the Nest. So please do go and check those guys out. If you want any links and bits and pieces to their Twitter accounts or any information, just come and hit me up and I'll provide them all for you. There's just too many legends to list on here at the moment. But for me, I would be looking for confirmation here, right? I wouldn't just be wanting to just jump in and buy. I wonder how the market will react to midterm elections. Yeah, good point there, Floppy. That is J Trader, Trading Tank, as you'll know him for on Twitter. Just one of the most exceptional guys and traders that I've ever come across. And he's unbelievable with his news events. And as we sit down and we have our TA meetings weekly, he always brings up really, really good points. And that is going to be really, really big. That's going to cause turbulence in the market. We've also got to remember we've got CPI this week as well. In fact, we've got a lot going on the news event, guys. Again, come over, check our stuff at the Nest. We do a weekly release on a Monday of all the key news events to keep your eye on. But definitely make sure that you've got some kind of vehicle to keep you updated with those news events. All right. Let's have a look. Yes, I am a mod from the Metaverse Pro. What indicators that VPro? It's B Pro, the Burbicator Pro. It's our own in-house indicator. You can find out more information about it over at our website. Over at theburbnest.com. And if you've got any questions about it at all, mate, you can come and find me on Twitter or just sign up, take a free trial at the Nest. Come and ask as many questions as you like. So let's have a look what we've got. Great analysis as always, Burb. Thank you, mate. This is BC Richfield. I'm just hijacking Burb's stream. He's doing some magic over at Token 2049 at the moment, and I'll be heading over there shortly to join him. But thank you very much. Nicole, I'm in London. Is this a private meetup? Come and hit me up on Twitter and stuff like that. I'll let you know what's going on. There'll be some events around. Token 2049 is a big crypto event that's taking place in Greenwich up in London. And then there's some meetups, after parties, and some networking events going on, I believe, over in West London. So going to go and stay up there for the night, meet up with some absolute legends, and yeah, just see how everyone's doing. So yeah, tomorrow's CPI, exactly. How often do you personally do this analysis? So I do the analysis daily. Okay, so I get up for the London Open. I trade London Open, London, New York crossover are my main kind of trading sessions. In and around that, I work providing content and working in and around my colleagues and fam at the Nest. And then I do YouTube a couple of times a week. But for chart analysis, I'm always on the charts. I love looking at the charts. It depends as well, right? That's maybe not the best thing to say, because actually I think some people get themselves lost doing too much charting. So I cover FX and traditional markets, but most of my stuff is done on crypto. ICT says something which is most people are better off, not most people, not meant in a derogatory form, even professional traders, focusing on one asset or a FX pair, for example, especially in FX, and really learning and mastering that. Sometimes it can get, quite muddy or mixed up when we're looking at loads of different assets. But for me personally, I work through a number of different assets for charting purposes. Obviously, crypto tends to follow a little bit of a pattern, but on the traditional markets, especially in FX, you obviously get a lot of different correlations between the different currencies. Thanks. You're welcome, Bern. More than welcome. Jono, then go short. Okay. And John, and do you do one-to-one? Yeah, so I have a closed stable of private mentoring students that I work with on a weekly basis. But in all honesty, that's a really, really good format when you're looking to develop, especially if you're looking to take this on professionally. But I'm not really one for plugging sales stuff, but I'm really, really proud of everything that we do over at the Bird Nest. And I think being part of a trading community like that that's so heavily focused on education is massive. Yeah. So yeah, do check it out. Come and see it. If it's not for everyone, it's not for everyone. But you can take a free trial. Come and get involved in Conquest. Get yourself some great prizes. Come and check out the community and see how you feel. Whack Shah, hey buddy, good to see you on the stream again. Good to see you. And then Trader ZA, love the name. Great stream, bro. Thank you, mate. Kill zones. Yeah, okay. So in terms of ICT kill zones, so they're times of day that we're looking to trade. All right. So they're broken down into sessions, like the London Open, which is 7 a.m. till 10 a.m. This is in UTC. And then you've got the New York session, which is midday until 3 my time, which is the New York Open their time. And then you've got London Close, which is, let me think, UTC 3:30 to 5. And then Asia session is 1 to 5 a.m. Like that's my time, right? So kill zones are basically times that we expect, and this is teaching of ICT, right? So it's when high volume sessions in the market and when algorithms, bots kick in on an institutional level. So it's when we can expect high volume price moves. One thing you can absolutely do, type in ICT, look at his kill zone theories, and then there's a great free indicator that you can get, which is this one, KZ/daily/TDOL, right? And all it is just allows you to put your kill zone times in, yeah? And you obviously fit them for how it works for you. And then let me just show you this very quickly. And you're then dropping down onto the lower time frames. All right, it's giving you your trade zones, all right? So I don't really use these. I know the times that I trade, so I need to update these because we've had daylight savings now, so they would be moving forward. But what we'd be looking for are our opportunities within inside the kill zones, all right? So that's when you're looking to take the trades. And what you notice as well is we get these really big moves here, right? So if we're looking at this for an example and we see a consolidation here through London, yeah? So again, we get this consolidation, we see the manipulation. So we take out these lows, generate liquidity, and then we get the distribution, all right, to high side targets that we'd be looking for left on the chart, all right? And again, doesn't work every single day, right? But my favorite session to trade is this London and New York crossover here, all right? And that's what ICT means by kill zones, buddy. So let me just pop that off and we'll go back to our daily chart. Oh, yes, Twitter, guys. Apologies. So Twitter is BC_Richfield. All right, guys. So come and give me a follow on there. I'll introduce you to all kinds of legends. All right. So Twitter, just running through some more questions here, guys, and then I'll just finish this up. Or actually, we'll take a quick look at Sol. I think someone asked about that earlier as well. Twitter dumping stuff, Meta dumping stuff. Who's next? I think CPI might be fun. That's from Stephen. Yeah. Yeah, it's definitely an interesting market at the moment, mate. Very news driven. Obviously, a lot of these things, aren't overly healthy for the space. But let's, see how this one Develops floppy all in 100x leverage short. Obviously, for everyone on the stream, he's joking. I hope he's joking anyway. All right. And Stephen, besides, thank you for the everlasting clear TA explanations. Calmness helps in times like this. Thank you very much, mate. I do my bit. I was very, very fortunate when I started learning how to trade that I had some really, really good people around me that took time to help me for free. And to be honest, that's why I do what I do. I think it's really, really important in life to give back. Right. And I'm not saying that I'm giving back to you guys, right? I do this because I enjoy it. And if I can share certain experiences and bits and pieces that I've been through that help you guys, then that's fantastic. All right. I'm not saying or suggesting any of you should follow me or that you should copy what I'm doing. It's just if the things that I've learned over the years can help you guys, then that's really, really good. And that gives me a really good feeling as well, because I know a lot of people went out of their way to help me when I was learning many years ago. And yeah, so Twitter's on there. So Tom, again, in my opinion, employment numbers have been massively manipulated, no recession, etc. All the big companies have been reducing their numbers. Yeah, do you know what? So I was speaking to someone, an absolute legend in the macro space about this recently, who had some similar theories actually, because it's quite easy to botch those numbers. And again, depends what your view is on conspiracies. But for me, I don't believe massively in coincidences and stuff like that. Like, I believe the markets are manipulated. I believe most things are, right? You know, life is about control, and governments, institutions need to control the masses, right? And you can't do that in such an obvious way that you catalyze rebellion as such. What you need to do it is in a more subtle way. All right. Trader Z8, cool. Thank you, mate. You're more than welcome, buddy. Always feel free to pop on and ask any questions like that. But for that one, I do really highly recommend watching ICT stuff on Kill Zones. It's really, really good. There's also another guy as well called Trader Dane, I think. Look, he does a really good breakdown of that. And one from Floppy, which I couldn't agree with more in these rough times. We got to keep our humor. Absolutely, guys. Also, as well, you know, trading has that addictive nature to it. We want to take trades, but we don't have to trade every day, guys. All right. You know, obviously you want to make sure that you're taking trades when it fits your system. Right. And for me, I like to take these trades at key points, key highs and lows, fair value gaps, order blocks, right? And key levels. I wait for price to come into an extreme, and then I'm looking for reversals. And if we get those reversals and it fits the high time frame bias, that's what I'm looking to trade. So something else I just wanted to cover with you guys quickly before I let you go about your business. Thank you for everybody who got really great viewer numbers in today. And yeah, really, really appreciate all of you. Emblaze, you legend. Awesome. Yeah, Emblaze is saying here, you don't have to, but you want to, right? That's about trading, and that's the absolute truth. So yeah, Calvin as well. Yes, I do indeed, mate. In fact, I do sessions where I open up for chart requests, which I'm going to do again next week. So do pop along and we can take a look at some requests. I'm going to take a quick look at Sol at the end of this as well. Someone asked at the beginning of the stream. So yeah, we can take a quick look at Doge as well. Let's do a quick top down. Just very quickly, something I wanted to cover on here is market structure, right? Because I think that's something that people forget about quite often. We can all get caught up in it, right? So people were saying to me about this dump and saying that it just, you couldn't foresee this. What would you have done to get into it? And I just wanted to share this with you, really. So even on a 4-hour scale, and I would enter this on a lower time frame, right? If we've got our low here, so we've got our low, high, set this interim low here, right? There's no doubt that this is our market structure break, yeah, or our change of character is called as well, or a market structure shift. Now, for me, what I'm interested in is how price moves through this, right? Displacement, as ICT would call it. I call it, or I don't call it anything different, but it's the aggression of the move, right? Now, the mistake, in my opinion, would be to try and get into the trade when it's dumping like this, because we could be just having a liquidity grab below these lows, yeah, before price reverses higher. Also, if you're FOMOing in at these kind of points and you've got a stop loss here, then you've just been tagged by this move here, which when people say to me, why do you think markets are manipulated, but they're controlled in certain ways, then just moves like that, right? You've got a load of liquidity and stops above here. Price has just tagged that perfectly and taken that out, right? But for me, in terms of how I would look to get into this move, I'd be looking for the low, even when the move's coming down to here, right? What we see is we look across here, we've got these relative equal lows, we've got liquidity below here. Now, when we see that taken out aggressively, right, and there's not an immediate reaction, it continues to go down, then once again, we're looking for a couple of things. We're looking for inefficiencies, and we're saying, okay, if the market corrects back, what could be luring it? Yeah, which would be this. But then, as I said before, we really want to also be taking into account for our order blocks, right? So on the higher time frame, we'd have these candles here. We can either take We've got these here on a 4-hour, but if we go up through the time frames, we would find one here, and we can see these 3 candles here. Yeah, this up move before the big sell-off. This is where price has retraced to, right? It's come in to find this liquidity. So for me, when we had this breakdown, I'd be waiting for this displacement, this strong move lower, and then I'd be looking for a retrace to this area, right? Now, as we can see, we've got this in here. What we'd be looking for, right, as price comes up into here, price comes up into our level of interest, right? And then we're saying to ourselves, okay, well, what we want to see here is we want to see a breakdown in structure, right? So for me, I'm not looking to dive in here because I don't know if this thing's going to pull back, fill this inefficiency and go higher. What I want to see is a low B set, which we get here. So there's our break. Set that low, come back up, broken. Again, look at the displacement. Look at the energy that the candle moves through. Bang, right? Straight through. So we're saying, okay, sellers have stepped in here. It fits our high time frame bias, right? Now we're saying to ourselves, okay, well, where do we enter? We don't just want to take a market order because if the market starts going down aggressively, then we get slippage and it messes up our order. So again, we just look for the inefficiency, right? Or I look for the inefficiency. I don't know why I'm doing these in red all of a sudden. Let me move these back to grey. So price comes down, leaves this inefficiency. We tag it with this candle here. We can put our stops above here, the first of the 3 candle move. Yeah, so that's the first candle. This is the displacement candle. That confirms the displacement, gives us our fair value gap. Stops above here, entry on this line, or I'll occasionally do 2 entries. I'll have one on the leading edge and then one at the 50 line. Yeah. And then we're obviously targeting lower prices down there. So once we have our higher time frame bias, we're just driving down into the lower time frame charts. All right, guys. So let's find a soul chart. People still interested in seeing the soul chart? Just catch up on a few of the comments. Thank you, AI. You're more than welcome. Floppy, you're welcome as well, brother. Chris Gross, yeah, perfect. Someone's got back to you on that one. Soul, yeah, okay. Gauge on Soul as well. And then perfect. All right, yeah. So let's take a look at Soul. So I'm going to try and rip through this really quickly, guys. I want to let you guys go in the next kind of like 5 to 7 minutes. So, hey, Mike's in there as well. Soul, legend. Yeah, we're going to take a look at that. And I believe one of the gents on here as well, or ladies, asked for Doge. All right. So let's have a look. Here we are. So weekly chart. Yeah. So what we're doing here is we're going to do the top down in exactly the same way that we were looking at before. So now we've kind of purged down into these levels here. Yeah. Well, all of a sudden we're saying to ourselves, okay, let's look at what price has done. If it's reaching down from here, so look at all the liquidity we've got under these lows. Price has driven into this. We could yet see a bullish reaction here and a push higher. So I would be looking, and I mean, this is thin. And by thin, I mean, obviously, but we've got to go on what the chart tells us. This was that last order block, the last down candle before that move higher. We're allowing from wick to wick because we had our inefficiency after it. All right, so once again, let's make that blue to keep it consistent. That's what I'm looking at there. That's my key point of interest at the moment. All right, so as price comes into this here, we want to see this hold. If we start breaking down below this, then this fast move here could get filled and we'd be looking at this tiny little order block back here as well. All right. So for me, that's what I'm looking at for Soul at the moment. Let's drop it down onto the daily, see where we are with that. So daily's looking pretty grim as well, but it has given us this. If we close, right? Obviously a big if, right? We don't want to be presumptuous. If we close the day and we leave this fair value gap, if we believe that price is still heading lower, yeah, if that's our high time frame bias, then we would be looking for price to revisit this area here, right? And then break back down, right? We would look for a reaction within this inefficiency here and then look for price to break back down, all right? The key thing for me here is we've taken out these lows. This move through here was so aggressive. Could be news driven, could just be the nature of the market, right? But what we do know is that it's ploughed through this liquidity here. It's now dipping into this. The other option for me would be if we lose this, we start closing below it, I'd be looking for retests of this area and then for price to trade lower. And in terms of lows, on the weekly scale, we would look back and I think we had an order block in here or here, and that's what we'd be targeting. I mean, scary numbers, right? You know, when you look at what Sol was pumping up to, what was it, 60 odd, I think it got to, didn't it? Or, yeah, just below. And now we're looking down some downside targets, you know, potentially down as low as sort of $5, right? So that's how I'd be looking at Sol at the moment. Like I said, for me, I'm not really looking to enter any trades at the moment. I want to let the market settle. We need to remember we've got some really, really key news events, CPI coming up and stuff like that. So really do keep an eye on that as well. Pubo Chiasm, really sorry for that horrific pronunciation of your name, mate. FTX and Alameda are operating a scam just like the privately owned Federal Reserve and government scam on the taxpayers. Yeah, I mean, it wouldn't surprise me, mate. Manipulation in the world, I think, very, very difficult to fully understand it. What we can do is we just want to make sure that we're on the right side of the trades as often as we can be. And Jeff Cooden, where is the final bottom? That is a really, really good question, mate. It really, really is. I'm not sure. What I would always suggest, like we looked at with Bitcoin and bits and pieces, is all we can do is play these things level to level. We've got our level here. We've got our level down here. The ultimate bottom on any asset is always zero, obviously, right? Do I think crypto's going to zero? No, I don't. I think it's got too many real-world applications. But it's not my job to make those predictions. And some of the finest analysts I know are completely chastised by predictions that they made and don't get hardly any credit for all of the good work that they do. At the end of the day, it's the market will do whatever it wants to do, right? We're in the job of trying to collect data to allow us to make informed decisions, and we're never going to always be right. You know, just doesn't happen like that. So they're unpredictable markets. We build strategies and systems to try and help us predict, to give us that edge. And trading is a winning and losing game. You just need to make sure you're winning slightly more than you lose, or more importantly, that your risk to reward is higher so that you're making money consistently. All right. So one last thing, I think someone did ask for Doge. I imagine most of the charts are going to look pretty similar at the moment. But let's just take a quick look. Just clean some of this up. So again, we can see here in terms of previous analysis we've done on this one, in terms of key levels, looking for expansive moves higher, these powerful moves higher, retests. We can see something similar in here that we were talking about. I won't go into it on this one. Again, ICT concept of premium and discount, where we take the range that we're in. Yeah, we're looking for price to either come into. If we want a short, that's a premium. If we want a long, that's a premium. But let me just get rid of this stuff before I digress. There we go. Get rid of this as well. So very similar to most charts at the moment. If we're looking at this on a weekly scale, the one thing that we've got here actually, and I mean, look at this inefficiency here that we had, right? We come down, we filled that now, so that's off the table. What we seem to be getting supported by here is this little order block at the moment. Actually, didn't get the inefficiency afterwards, do we? So we want to take the body. So maybe because of what Musk came out and said, or with him taking over Twitter, we've seen some bullishness on Doge as well. But again, right, we can see this. Now, when we're looking here, this impulse move here, again, going back to these inefficiencies, this is what we're looking for here, right? So we're expecting price to rebalance in here. Right, so again, we've got the order block here that's giving us some buy opportunities. At the moment, we've got bullish structure because we've got the low, we've got the higher high. As long as we come down, we could set a higher low in here, in which case we would look for price to move higher. And then on a daily scale, once again, if we were looking to get into this, if we believe price is coming down here, we've got a few key lures, right? So we've got this inefficiency here, this fair value gap, which could be drawing price down. Let's just do that in a different color so it stands out. So we could be seeing price draw down into this, yeah? And then for an example, if we see price close around here and leave this fair value gap here, right? Again, this isn't valid at the moment, guys, because we haven't had the close on this. But if we imagine that we did, if we're expecting lower prices, yeah, we could be looking for something like this, right? Price to come back into this area, right? We would then look on a lower time frame, yeah, for that liquidity sweep, price to come back down. And then we've got a really nice clear downside target here with this inefficiency. Or maybe we kind of hold here for a little bit before we drive down again into this order block, all right? So that's how I'd be looking at this at the moment. However, obviously, if price gets up there, we don't get that bearish reversal and we clear this and we get back above the fair value gap, yeah, then we'd be looking up for these order blocks, all right? And we'd be saying maybe price is going to get drawn a little bit higher, all right? Baby Whale from Texas. Hey, buddy. In the house. Indeed, indeed, indeed. Hope you are living at large over there in Texas, my friend. So DXY, just super quick before we close up. Now, for those of you that don't know how I use DXY, which is the dollar index, which is the dollar weighted against the euro and certain other currencies, right, but heavily weighted towards the euro, is I'm using this as a counter-correlated asset. So as in when price is going up on the DXY, we expect risk assets like Bitcoin to be going down, all right? And the same way with this, when this is going down, we expect price to go up. So we can see here the last few days we've had this corrective move down here when we had that impulse move and we've had those good buying price action, that bullish price action on risk assets. And now we can see where we're now starting to push back up here is reflecting the opposite of what's happening on Bitcoin. Again, in terms of charting, we can see we came down and we took out those lows there, got a bullish reaction. Now we're saying to ourselves, okay, if we now come in and cleaned out these lows, yeah, also, the other important thing into this order block, which we can see the body of this lines up perfectly along here. If we're now going to be seeing bullish price action on the DXY, then we can expect further downside for risk. What we wanted to see from a bullish perspective, certainly what I was looking for on the DXY was for price to get drawn down into this, yeah, and then to lose this and be searching for liquidity below here or this key 106.97 level, okay? The other thing as well, we want to look into here is I always like to keep an eye on the S&P 500. This is the ES1. This is the mini futures, all right, just smaller contract size. And again, what we're saying here is we're looking for confluence with Bitcoin, right? So this is a risk asset as well. So we're saying to ourselves here, we can see we haven't had that same kind of extreme move that we've seen on BTC, right? So we look at this daily candle. At the moment it's developing, we've got a little bit of downside versus this, right? This daily candle and the predecessors before it, which is showing us that there's a little bit of a disconnect between the indexes. So between S&P 500, NASDAQ, stuff like that, right, isn't crashing as hard as Bitcoin is. Now, that could be an early indication of what's to follow for risk assets, yeah, like the NASDAQ and the S&P 500. And if that is the case, then once again, what we're saying to ourselves, okay, is where's our likely target here? And once again, look what's happened. We've come in, ES, which is great to trade, really nice and clean, in my opinion. We've come in, we've now filled this inefficiency, this fair value gap that was left here, yeah? So now we took out that sell side liquidity, came down, left this inefficiency, have now rebalanced that. So for me, if we're now looking at a continuation of bearish price action, we're looking at liquidity below these lows, all right? And then ultimately further down, the other thing that we want to take into consideration here, let me just delete this so it doesn't get too messy, is this order block, right? So once again, we can dive onto our lower time frames. Let's look at this on a 15-minute, for example. Just scroll across here. Right, so what we're saying to ourselves is we've come up. This is the point at which we filled the inefficiency. Yeah, I know I deleted the box, which was stupid. But what we've had here, yeah, is the break of structure. So for me, the time we'd be looking to enter. So we set this higher, right? We've taken out liquidity above these and anything that's to the left. We've now come down, right? Here's our market structure break. Again, a nice powerful move through that, showing us that the market's ready to move down. Doesn't mean it's going to happen right away. What we want to do is we want to be patient. We want to look for our inefficiencies or our order blocks and say to ourselves, where's price likely to head into? Yeah, we can see price gets drawn back to here. Yeah, we can then drop down onto the micro time frames, look for our market structure breaks. Yeah, so 1 minute quite often is the time frame that I trade on moves like this. If we're looking for moves inside larger moves, right? Just drag this across a little bit. Same principle. We see we get our market structure shift here, yeah, or break, set that low, big impulsive move below it. And then we can look at this inefficiency here, right? So with buyers in here, even on this edge, where would I be targeting? The order block that leads to this move up and ultimately below this low, but ultimately this high time frame draw on price, all right? So we can see that's playing out at the moment. Price is coming down, lower lows, lower highs. You know, we won't setting the world on fire on this one at the moment, but we'd be in some decent profit and we'd be looking for price to visit this and then down to here. And we'd also put that in with some correlation on the DXY. All right. So, baby whale, what have we got going on, my man? Buying Solana all day long. Nice BLZ. I'm bullish. Staking and caking Solana, the future of technology. Pubo God almighty, I'm sure I pronounced that hideously. I'm scooping up H-bar, and a big thank you from Jeff. Look, guys, thank you very, very much for sticking with me through this stream. It's been a real pleasure. I love going live for you guys. And I really appreciate all of your time. You come on, ask really, really great questions. And it's really, really cool to do this with you guys. If there's ways you think that I can improve these streams, there's different bits that you'd like to see or that, do come and hit me up at the Nest or come along on Twitter. Like I said, do just really want to remind everyone, do look down in the comments section, the description. We've got free trading congress. It's all in the name. It's completely free. We've got 10 days of immense stuff going on with some of the best people in the industry. We've got absolutely top stuff. All right, so please come along and check out. It's all free. There's going to be prizes, giveaways, all kinds of stuff. Just a couple of thank yous. Thank you guys, thank you so much. From Miami, Mike, awesome buddy. And then just one here from Nitpar. Are you able to explain once again how you establish the fair value gap? I still don't understand how you mark it out. Yeah, of course, mate. Let me just do that for you quickly. I mean, obviously they're on any time frame. I don't know why I'm choosing the daily, but let me show you how we look for them. So it is a 3-candle pattern, all right? So what you're looking for is you're looking for these displacement moves, right? So you start to notice them all over the place when you notice what you're looking for. And this grey box here highlights this. So what you see, and unless something gapping, but let's use this as an example here, all right? See this wick here pretty much crosses with this one. There's a tiny little gap there, yeah? But what you're looking for a market to be efficient is you want these wicks to cross. So if we look at every 3 candles, this one, this wick here, so we look at the first and the third candle. So 1, 2, 3, yeah? This wick, we want to see the wick of the third candle cross it, yeah? So think of it like a link in a chain or a brick wall, all right? Now, when we look at this 3-candle pattern, candle 1, candle 2, candle 3, we notice that candle 1 and candle 2's wicks don't cross, right? It leaves this fair value gap or inefficiency. Now, what we're saying is that needs to be filled at some point. So that's how we look at that and we say to ourselves, okay, price comes back to fill that inefficiency. A good example is this one here. All right, so again, 1, 2, 3, yeah? We're looking for that wick on candle 1 and that wick on candle 3. And if there's a gap in between, yeah, where we get this impulse move, then that's what we're looking for. And what we're saying is the market wants to be efficient. So it wants to fill that. It wants to pop back. It sees that you've got a hole in the wall. You've built your wall and you've looked back and you've gone, Christ, I've bloody left a hole in the wall, right? So you've now whipped back to pop a brick in it and now you can continue on your journey, yeah? Sometimes these things will lead to reversals, but what we're saying is that these tend to be a magnet for price, yeah? It lures it back up because the market wants to make sure that it's efficient. And when you start looking back on the charts, you just start seeing them. All right, 1, 2, 3. So look for these kind of big down or up candles like this one. when you see smaller candles of that either side, and you'll start to notice these gaps, right? So see how this inefficiency here is filled here, this inefficiency here is filled here, this one is filled here, right? And we're just saying to ourselves, what's drawing price, yeah? And we look at that to be a magnet on price. So that's why I've got this one marked out here, all right? Expectations were when we've taken out this high here, we've broken structure to the upside here. We've had a couple of nice bullish days. We've got capped at this key level, 3929, which is a level for me, which comes off of this order block here, right? Again, no gap, so we're just taking that from there. And we see how prices come into the lows of that and then up into the highs, being capped. I expect that to get filled at some point. But again, we can't say exactly when we're going to fill it, right? We just want to marked out on there, and we just want to be aware when they're coming in. For the moment, I think that now we've come up and we filled this inefficiency here, this fair value gap, it makes sense to me that we might come back down to this order block considering the bearish pressure that's on risk assets. All right. So look, thank you very much, guys. Nick, I hope that has helped describe that. If it hasn't, mate, do come and catch me on one of the other streams. I'll go through it again. Burn, thank you. You're welcome. Bobby as well. GB. Black screen, please. Sorry, mate. I can't stand trading on black screens. Solana, $10 maybe? Yeah, could be. I'll give you a follow, mate. Thank you, Ryan. Very kind of you. And Pubo Kaiser, no revenge trading. All right, no revenge trading. I know it's frustrating and that, but sometimes when we feel that frustration, best to take away. I like going out for a walk with the dog, clear my head, get down the beach, and then come back to the charts when we feel we're ready. Remember, guys, trading is a lot about patience. We all want to trade every day, yeah? Let me just show you something to just finish on, not on a higher, because that sounds really arrogant. We'll do it on Bitcoin. ES, obviously, traditional markets works really, really well too. But I just want to show you something. If you're ever struggling for bias, right? So, I mean, this is on a daily scale. You can break this down onto lower time frames. I like using it on a daily. But one of the very earliest things that I learned years and years ago when I took ICT's mentorship. Now, when we're looking at market structure, right, and we develop our bias, yeah? So we've got here, low, high, higher low, higher high. So when we take out this high here, yeah, we've got our market structure break to the upside. Now, what we want to focus on are the days and the opens, right? So what we want to see for a bullish day is we want to see the day open. So that's the close of the prior day. This is the open. We want to see price push down, right? Then on the lower time frames, we wait for the market structure to shift. And then we're looking to trade it up, first of all, to the prior day's high, and then higher targets. Like we have this inefficiency here, right? Fair value gap. Look what happens here. Day closes, opens, pushes down, wait for market structure, trade up into the prior day's high. Market opens, drives down, pushes higher. Opens, drives down, pushes higher. Opens, drives up to take out the buy side liquidity, the highs, before correcting down, right? But we've still got our bullish bias, right? So we're not interested in taking bearish days. We just don't trade that day. Or maybe we get a false signal, we get chopped up, no problem. We've had 4 tradable days, 4 probably winning trades here in terms of days. We then move to here. Again, we've got our high time frame bullish bias. Price trades down a little bit, trades up past the prior day's high. Price opens, trades down, pushes up. You get the point, right? And then we then look for bearish breakdowns, right? So we have this break here of market structure, this huge displacement, leaves this fair value gap, which was what was our key trigger in terms of going short here. But again, we're waiting for our bearish days. Price opens up, trades down, closes. This time, the opposite. So we get 1 tradable day, 2 tradable days, 3, 4, 5, 6, 7, 8, 9, 10. Then get the break of market structure here. So take a look at the days as well, guys, and how you would look at that. Right, how you would look at that is, so we've broken market structure here, right? That's our market structure break. So this is the day that we're interested in, yeah? We're saying to ourselves, we're now bearish. We've had this big displacement. We expect this day to continue to the downside, right? So I'm now going to drive down onto the lower time frames. We're going to pop on our session breaks. Hope you can see those, guys. I have them seriously light. So this is it. This is just depicting the start of the new day, UTC, right? So what we're looking for, and in fact, it will help you even more if I drop this down onto an even lower time frame. So there's two things that I look for here. We want the open of the day, so we open down here, right? So let's mark it. Daily open, right? Now remember our theory. We want to see price push up, break structure to the downside, and then we're sellers, yeah? And this isn't cherry picking, guys. This is just using the days that we've got, right? So just to show you in current terms. Here's our open. Price pushes higher. We get this break of structure to the downside. Yeah, it takes out that low. So where do we want to be buyers? Here's the displacement. Here's the inefficiency. Here's your buy orders. Right? Price retraces into that there. Where does our stop loss go? So this is totally up to you. You can either put it above the first of the three candles, so 1, 2, 3 candle move that gives us the inefficiency, or you can be more conservative and put it above the swing. Yeah. Either way, let's just say we're going to go above the prior swing. What are we then doing? Well, we're then saying, okay, we're looking left for our key targets, right? And for that, ideally, you do want to use higher time frames, right? So we're a shorter in here, yeah? So what we're looking towards are these lows. So we probably have an early target of this. Just mark these up quickly. And then we'd be looking for an extended target all the way down here. Obviously, we would look left as well. We'd want to take into consideration things like this. But just to put it in a more binary term for you guys. So here's our target 1. We take profit heavily here. That's a 4R trade. I like leaving maybe 20% in, something like that, all right, to then run onto an extended target 2. Because if our bias remains the same and we still expect price to reach down here, right, well, we can cash out of this trade, take heavy profits here, leave some in. And then what we're saying to ourselves, well, if our bias is still intact, we can look for our market structure break here, yeah, and then we can look for downside trades here. All right, guys. So do always consider the daily open, weekly open, monthly open are always good things to get on the chart. All right. So I hope that's been helpful. If you want me to cover that in more detail on later streams, I'll be happy to do so. Just a quick question here from Vicos77. You look at inefficiency, but candles on some specific time frames, 15 minutes is valid. Yeah, absolutely. So you just want to compartmentalize the two different time frames. Higher time frames for your bias. Yeah. So is that fair value gap drawing price like we would look at on the daily, the 4 hour, the weekly? Is that the magnet for price? And then when you're looking for entries like we did on this one, yeah, then it works on all time frames, yeah, or lower time frames for your execution time frames. But for me, I'm using this like a trigger. I'm waiting for price to come back, and that's where I'm triggering my entries. So I hope that helps out, mate. But yeah, for in terms of the bias of where I feel it's pulling and pushing price, then you just decide that based on your high time frame, and then I'm using this on this as a target for a trigger to come back, and then for my sell orders to be filled. I should go back to price action strategy, RSI, MACD, Screw, Lux, and Cypher. Yeah, I mean, there's lots of options out there, isn't there, mate? That was from Hugo Chiasm. You're going to have to teach me how to pronounce that name, buddy. But yeah, look, guys, I know I've taken a lot of your time. Thank you very much for the stream today. Anybody that's in and around token 2049, have a fantastic time. Might catch some of you guys up there. I'm going to be live again on Monday and again on Wednesday. We'll take some chart requests on Wednesday as well. So thank you very much for your time. This really didn't work out well in terms of keeping the stream shorter and punchier, but you know what? It's been real good fun for me. I hope you guys have got some value out of it. I'm wishing you all a fantastic week ahead. And if you've got any questions, do come and grab me on Twitter. Come and drop by the nest. Take up the offer of the free membership. And do please come and be part of Congress. It would be fantastic to have you guys there. Have a great week. Trade safe. Remember the key news events coming up. So make sure you plug into those. And I hope to see you guys around the nest.